Welcome to the Fintech Files. In this episode, I'll be talking with Ian Henderson, the CEO of Kyckr, to investigate the money institutions and how technology can help. It's Kyckr, K-Y-C-K-R, as in Know Your Customers, an essential procedure for anti-money laundering regulations. Ian, welcome to the Fintech Files.
Hi, good to meet you.
I think most people would be familiar with the acronyms KYC and AML, but can you just remind us what we're talking about and how important is it in the current financial system?
Sure. AML is but one aspect of financial crime. It's probably the most prominent, though, because of the societal cost associated with money laundering. It's often grouped alongside the financing of terrorism and fraud.
And therefore, there's a moral impact of it, but it's also highly regulated, and therefore regulators across the world are able to exact fines if things have not done properly.
That's correct. Essentially, money laundering is a process of making dirty money clean. Money that's been generated through criminal activity has to find some way of getting into the financial system. The way that typically operates is by mixing the proceeds of crime with legitimate money. That's where the laundering term has come from, and then eventually it re-enters the financial system. And usually the criminals will then use that now clean money to finance the purchase of luxury assets, homes, vehicles, boats, etc.
So obviously no one wants to be involved in that. And how does then the acronym KYC fit into that?
KYC stands for Know Your Customer. So therefore, if you do not know your customer, then there's a fair chance that you could be facilitating bad actors launder money. So therefore, the first thing you have to do to prevent the laundering of money is to make sure your customer KYC. So most people, if they wanted to do business with a bank as a private individual, they would have to pitch up with their passport to prove who they are and their utility bill to prove where they live. That's one way of ensuring that that bank or payments company knows who its customer is. The same thing extends to corporate customers to make sure that the business is legitimate, who the directors are, who the shareholders are, and that's what Kyckr does. So essentially KYC for private individuals, KYC for corporates, common ground rules, slightly different tools for banks to make sure they adhere to the rules.
And to focus on the big picture, what are the trends? What is happening in terms of the amount of money laundering we can monitor across the globe? Can you tell us a bit about that?
Yes, so the one thing you can say categorically is that it is increasing. You can see that there is no regional differentiation. It is a hot topic globally, whether that be the Americas, Europe, Asia Pac. It is just a significant challenge for regulators and financial organisations globally. You've touched on an important aspect. We know the information that we know because we've uncovered the laundering, but clearly there will be a significant proportion that goes undiscovered. Over time, with banks getting more sophisticated, more and more is getting caught. The challenge is the bad actors are pretty smart and are seeking to stay one step ahead. The one thing you can see for certain is the number of penalties imposed on banks and financial organisations for failing to know their customer and facilitating laundering. And some work that we did last year pointed to in excess of $3 billion of fines being imposed on banks across the globe in calendar 2020.
Yeah, this is a staggering amount, and we'll link to your report in the description, but 3 billion matters no matter what scale you're at. So do you mind sharing a bit more details about the highlights of this report, the 3 billion fines in 2020?
Yeah, so I guess that there's a number of aspects to this. I think the failure to comply with money laundering directives fall into four broad categories. First, there is the cost of management time taken up when the regulator is investigating what has actually gone wrong within the bank or financial organisation. Secondly, there is the cost of the fine itself, which I'll go on to talk about in a bit more detail in a second, because that's what our report focused on. But thirdly is the reputational damage that can happen to a bank if its name is made prominent for money laundering compliance failures. And then ultimately, there's the fourth cost, which is the cost of clearing up the mess. So coming back to the second of those, the actual fines themselves, the work that we did, we looked at across the globe for all fines imposed by regulators in different countries. To give a de minimis, we looked at fines in excess of $100,000 US, and we found that 28 organisations across 14 countries had been fined for different AML compliance failings. There was no geographical concentration. It was pretty much spread across North America, South America, across Europe and across Asia Pac as well.
And this seems to be an ongoing trend, and it doesn't seem like financial institutions are unable or have very limited power to curb this, despite all the new technology and tool, and despite that it's something that's been going for quite a while. How would you explain that?
Yeah, so you're right, George. It has been going for quite a while. I think there's a couple of angles to this. So one is that I think initially a lot of the money laundering focus was by impersonating private individuals, and increasingly that's been closed down as a route because, to my earlier point, the passport and the utility bill, making sure you know who the customer is. It gets a bit more complicated with corporate customers. One, because they are themselves complicated, because you've got to understand the business, understand the directors, understand the shareholders. But equally, bigger volumes of cash can go through a business account than would typically go through a personal account. So I think what we've found is that, you know, every year for the last decade plus there have been penalties for money laundering compliance failures. I think what's happened is that over the last number of years banks have got much better at onboarding new customers. I think the bigger issue, what underpins some of these fines, is the fact that we've not kept the information up to date. The banks have not kept on top of those customers, so they knew everything about them at the time of onboarding, but 2, 3, 4 years later, if they've not kept the data up to date, the nature of the business could have changed, the directors could have changed, the shareholders could have changed. And I think that's what we're now starting to see, a different set of challenges around ongoing monitoring as opposed to onboarding.
And we're going to go into what Kyckr does specifically, but that seems to raise the point of data in general, right? Financial institutions have to deal with a lot of data, and they have to store it, to collect it, and it's also possibly messy to go through it. Could that be one of the challenges?
Yeah,
they don't know what to do with all the data, or they're missing data?
I think it's both of those plus a third thing, which is making sure you keep the information up to date. So one, there's a lot of information, so how do you store it effectively? And then obviously in a European context now, you've got GDPR obligations to make sure that you comply with. But obviously as private individuals and as companies evolve and change over time, you need to try and keep on top of that information. So there's always this constant need to refresh the information to make sure that your database, your customer database, holds the most up-to-date information. That's just difficult to do, and especially if you're a big organisation with potentially millions of customers, private customers, and hundreds of thousands of business customers. That's just a huge challenge.
That's where Kyckr fits into that. Can you tell us a bit more about how it works?
Yeah, so Kyckr can certainly help in that regard.
Services?
Yeah, so Kyckr can help in that regard. What Kyckr does is help with corporate customer onboarding. So we don't do anything around private individuals. It's all around bringing corporate customers onto the books of banks. What we have done is over the last 10 or so years, we have built the biggest network of access to global registers of any organisation in the world. There's almost 200 corporate registers that you can access at the touch of a button or through an API. And the reason that's really important, it means that you can get information from your local company register, but quite often you will find that the ownership structure of a company you wish to do business with takes you outside your home jurisdiction. So again, the Kyckr platform will enable you to look at a business that might be based in the UK, but it's owned by a Hong Kong holding company, and that Hong Kong holding company is ultimately owned by private individuals in China. Our tools will help you uncover that. And increasingly there is an obligation to understand the ultimate beneficial owner underpinning companies, people who own in excess of 25% of a corporate. That's quite difficult information to get access to, and again through our corporate registry capability we can facilitate getting that information into the hands of our clients as they both onboard new customers and keep their information on existing customers up to date.
I understand. So if, for example, I'm to sign a contract with a big contract company, I might check them out. And in the UK, it's fairly easy, right? The information is all on the company's house website, etc. And I can navigate through it. It's a manual process, so it's quite tedious, but I could do it. But then if there's another country involved, shareholders, then it becomes something very complicated to do. So is that what you're doing, but at scale? And I guess there's a lot of processing of the data involved as well.
Correct.
Not just access.
Correct, George. No, you're spot on. So what Kyckr does, if you take the Companies House UK example, clearly an organisation or an individual could go to Companies House and get a lot of information. However, if you needed, as you've said, to go beyond that country, let's say it might have been a Luxembourg holding company or a Dutch holding company that owned that UK business, then the Kyckr service will enable you to get access to that information. And again, because English is the common tool for the search engine, you're then able to find those businesses in international markets. That's the first thing. And then the second thing is that you're then, from that information, able to distill who the individual shareholders are, who the individual directors are. And again, if you were wanting to onboard that customer, you would then use a different bit of your KYC compliance tool, your natural persons compliance capability, to do the monitoring of the individuals that are directors and shareholders, to make sure they're not on PEPs and sanctions lists, to make sure there's no adverse media, and to make sure there's no issues with those as private individuals. So again, we can facilitate that whole end-to-end KYC onboarding journey.
And how does it look? Do you provide the information as raw data, or do you also have some kind of added value data where you can tell the financial institution if it's okay or not?
Correct.
Or do they do that part?
They'll ultimately do that part themselves, but there's a few angles here. And for most countries in the world, it is typically it's a criminal offence not to keep your local corporate register information up to date. So again, for example, in the UK, if there's a change of director, you've got 14 days in which to inform Companies House there's been a change of director. So you know that at worst, the information held at Companies House is 14 days old. So that's a helpful starting point. But what we do is we tend to structure that information so that you can get the same series of fields in the same format, whether that be the Luxembourg register, the Spanish register, the Australian register, the Nevada register. So that helps because we actually move unstructured data, which is typically the way corporate registers are held, into a degree of structuring. So that's the first thing we do. The second thing we do is we're able to access documents in PDF or digitally for organisations, because some organisations want to actually have the document, whether it be the financial accounts, the memorandum and articles of association of the business. They want them on file, so again we can give them those in digital form. So there's quite a lot of value add that Kyckr is able to provide depending on the onboarding rules of the individual bank.
It's very much a business of abstracting complexity and delivering it in fairly easy to use format. And in your case, is it mainly via an API?
Yes, so it's through two primary routes. We can access the information via portal, and then secondly with an API. And right now our customers are split broadly 50-50. Some are accessing our information by API and integrating it into either their own KYC platform if they've got their own in-house capability, or into a CLM or client or caseload, case management system. And then the other half of the customers simply use us as a portal solution, get the information and then use that as they choose. So typically it's the larger global banks that have the API interconnect and smaller organisations that utilise the portal capability.
I understand. I think I've got a pretty good idea now of how it looks from the client side in terms of what you deliver. Can you tell us a little bit about what you have to build or what you're building and updating constantly, and maybe some of the challenges of keeping up to date such a global database? Maybe not every country is as easy to use as the UK's Companies House that I know.
Yeah, no, that's a really good point, George. So look, the UK and indeed much of Europe, North America and Asia Pac have pretty sophisticated corporate registers, but yeah, some parts of the world are much less sophisticated, and therefore it can take a little time sometimes, or there's a degree of complexity involved in accessing the information. So I guess Kyckr's doing a few things. One is it's continuing to build out its global registry network, so some of the smaller economies that we don't currently have on board, we're looking to get on board, is the first thing. Secondly, we're looking to add brand new, fresh sources of information beyond the corporate register. So for example, local stock exchanges, the London Stock Exchange or AIM in the UK, for example, have got rich information sources, and we're going to look to start to add stock exchange information to our sources of data. And equally, a lot of the regulators have their own databases, and again we're going to try to start to integrate regulatory databases and not-for-profit databases into our overall data architecture. So those are the main things that we're doing. The second thing we're doing is there's this notion of perpetual KYC, the need to keep your information up to date, and that's sometimes called monitoring, and making sure that if you monitor your database case if there's been a change of director in one of your corporate clients, or a change of shareholder in one of your corporate clients, or one of your corporate clients has ceased trading, it's important that you know that very quickly. So again, a monitoring tool linking into the global registry network can help in that regard. And then the last thing that we're doing some work on is around UBO, Ultimate Beneficial Owner verification. That is a core aspect of the Fifth Money Laundering Directive in Europe, but it's typically applied in different ways across the globe. And we're developing tools that will enable our customers and prospects to be able to uncover the complex organisational structures to get at ultimate beneficial owners.
And if we go back to the client's point of view then, so how were they doing that before starting a hypothetical client, or we can take a real life example if you wish? How were they doing it before using your services? How does it change once they start using Kyckr?
Yeah, so most people have done it by throwing human resources at it, whether that is people in the domestic market or whether they outsource it to cheaper labour markets. But essentially it's a people solution at the moment, and increasingly you're starting to see that is expensive because it's people, it's prone to human error, and therefore the utilisation of machines to help support this journey is definitely the direction of travel. So I would say that today it's probably 75% human being, 25% machine. I think over time that's going to switch, and it should be 75% technologically supported, with the human beings doing the higher value add supervisory 25%.
How does it work for your own growth and your own marketing, and what are the main challenges that you encounter?
I guess the main challenges that Kyckr has encountered today is it's a relatively small business, supplying some very substantial global organisations. So there's only 20 people employed in Kyckr, so that has its own challenges. Until a couple of years ago, even though we'd been in existence for around 10 years, nobody had really heard of Kyckr. That's now starting to change. We've made significant investments in marketing. There's increasing recognition that it's important to get independently verifiable information from corporate registers as part of onboarding, so that's definitely helped. The tools that we've built around perpetual KYC and UBO verification have definitely helped raise our prominence and profile. And then clearly we've had to continue to invest significantly in tech. Over the last 2 years we've moved into a cloud-based proposition and solution, and we look to continue to accelerate that and essentially close down our legacy systems and keep everything retained safely in the cloud.
And I guess what we see, and we've spoken to other people who talk about data as a service, the importance of the cloud, the adoption of the technology, there's a mindset, there's habits as well that are not helping to jump on the technology. Is that also the case?
Yeah, I think that's been the case historically, but I think COVID has started to change this. I think you're starting to see, as people look at their cost bases, as people start to realise that actually people might never go back to working in the office 7 days a week, and therefore the utilisation of technology to support business generally, then financial crime adherence specifically, and then within that AML monitoring and things like that, which means that this journey towards digital transformation I think is going to accelerate now as we come out of the COVID challenges. So I think in that sense, this whole convergence towards technology solutions supplemented by human beings rather than driven by human beings will be the way forward. And I think KYC compliance is an obvious area where this can apply. There's a lot of information out there. B, it's increasingly available in digital form, so it can absolutely be grasped by organisations to find more efficient ways of ensuring that they stay on the right side of regulation, they minimise the degree of customer friction that this can cause, and they're able to get much more efficient at how they do this.
Yes, it's a good point, the customer friction, because indeed for a bank's point of view, it's also about onboarding the good clients as quickly and smoothly as possible. And I guess that's a very important marketing aspect for them.
So that's a really good point, George. You often find that the onboarding client officers got to go back to the end client 3, 4, 5, 6 times to get different bits of information. That causes client frustration. You might find that actually one bit of the organisation's already asked for the same bit of information. It's being asked for a second time. And then ironically, a lot of that information can be acquired without going direct to the customer. So you could go to the local corporate register and get a lot of that information without even needing to bother the client. So in that sense, it would make a lot more sense to do it that way rather than troubling the individual client.
So it's very similar, in fact, to how different is the onboarding process with those neobanks compared to traditional banks. If we look ahead now, how do you see this fight against financial crime shaping in the years to come? And do you think it's a race, it's a technology race of the good players versus the bad players? Or is it something that eventually can be, reduced to a smaller proportion as we go by?
Look, the plan would hopefully be to eventually reduce financial crime dramatically. But look, the reality is that the bad actors, A, they're smart, B, they'll always strive to stay one step ahead. And I think financial organisations and regulators need to recognise that. I think the second trend is that I think regulation will continue to increase. In the COVID world, then, we've seen regulators globally start to reduce capital obligations for banks for a period to enable them to facilitate lending. We've seen them reduce the solvency rules for insurance firms. I don't think there's any way that regulators would make it easier to launder money or finance terrorism. So AML regulation will only increase. However, technology is advancing at pace. You've got things like artificial intelligence. You've got machine learning capability. You've got optical character recognition capability, which means that the rich sources of information that exist on corporate registers in Kyckr's case or other databases as well can start to be digitally extracted, structured, normalised and then fed back to clients to hopefully enhance their onboarding and monitoring requirements, add value and make them more efficient. And therefore, if they're more efficient, they've got more scope to invest further in the tools that will keep them catching up with the bad actors.
What would be your advice? You've hinted on it, but what's your advice for KYC and compliance officers that want to benefit and embrace the new technologies that are now offered to them? Because, Of course, on their side, it's not just a switch on and off button.
So there's no question KYC compliance will continue to be very prominent. It will have a high profile inside all financial organisations. Secondly, I've touched on this already, I think there's going to be an increasing focus on efficiency. The rule at the moment is essentially throw people at the challenge. That's not a sustainable long-term way of going at this, especially when you consider the power that technology has to harness it. I think there will be a move from a focus on perfect onboarding of new clients to perpetual KYC, the ongoing monitoring of clients, and then lastly, this whole notion of understanding the ultimate beneficial owner of businesses will increase in prominence, and financial crime experts will have to increasingly get their minds around how they're going to do that and how they're going to do that efficiently.
Great. I think that's a very good roundup. Thank you very much, Ian. I'll conclude with a couple of lighthearted questions, as it's now customary. You obviously have a very illustrious path in financial services, being the CEO of Kyckr and previous companies. But have you ever considered an alternative career path, and what would it be?
Yeah, I guess when I was younger, like most people of my age who are Scottish, I was lucky to grow up in a period when Scotland had a pretty decent football team, qualifying for World Cup after World Cup. And if I had my time again and had any talent, I would love to have played football for Scotland.
Wonderful, ambitious goal. And as we're emerging from the lockdown here in the UK, can you tell us what would be your next, or maybe your ideal holiday destinations when we can get there?
For me, the ideal holiday destination, is certainly next on my list, would be to get over to the west coast of Canada, into the mountains, get some fresh air, see the trees, see the wildlife, see the lakes. When we're allowed to travel again, I think I'd like to be on the first flight to Vancouver.
Wonderful. I love the idea of a great open space. Ian, it's been wonderful and a very enlightening conversation. So thank you very much for your time and your insights.
Thank you, George.